We're now looking at the solution for section B, question number 2, which covers macroeconomics. In the previous video, we went through the questions in detail, and I also provided you a brief response in terms of what you would have been expected to respond in the exam setup. Now let's just look at the marking guidelines together, and I will explain to you as I go through the marking guidelines in terms of why the selected solution was the approach that was used by the examiners. So what is important about section B? In section B, you need to answer any two of the three questions. So in the exam, in your section B or in your trial, you'll be provided 3 questions and you will need to only answer 2 of the 3 questions. So that puts you in an advantage because you can select the topics that you are more comfortable with and decide not to answer the part or the question that covers the topics that you are not comfortable with. Again, it is very important for you to understand. Do not waste your time by answering 3 because only the first 2 will be marked. So what do we have in question 2? Question 2 covers macroeconomics. All the 3 questions in your section B, they are for the marks and you're expected to spend half an hour or 30 minutes. So we have 2.1. In 2.1, we need to answer the following questions. Name any 2 methods used to calculate gross domestic product. In the class, you would have been told that the widely used method is income approach as well as expenditure approach. So now, let us try to understand what is the income approach. So income approach, it normally looks at your tax minus subsidy, which is normally your income. It look at the salaries that are earned by the consumers or by the workers or employees. It look at the company's any income that the economy earns, right? And then we're looking at the expenditure approach. The expenditure approach, it looks at the expenses that the economy incurs. So what could be those expenses? When you're looking at the expense, it will be your government spending, it will be your household consumption. However, even though income and expenditure approach are the widely used and the widely known method, the production approach is also a valuable method used in South Africa to calculate the gross domestic product. So now what or how you would have responded, you would have provided either production and income or income and expenditure. Only 2, because you would have earned only 2 marks. So only 2 marks will be available for you. Therefore, it is important for you to understand that only 2 was required from you as a candidate. 2.1.2, how can competition stimulate aggregate supply in the economy? So how is the competition assisting in increasing the aggregate supply in the economy? So think of competition. What is competition? A competition, it means that there are more than one suppliers providing the same services or the same product to the consumer. So the number of suppliers fighting for the consumers in the market. Now let us read and understand how competition stimulates aggregate supply. Competition may improve production efficiency, resulting in more goods and services being produced in the economy. More suppliers we have, it means that there will be more products that is produced in the economy and it will be of better quality. Business may become more innovative, use new production techniques with higher productivity and increase aggregate supply. So what does that mean? Because there are a lot of suppliers that are producing the same products or that are producing or delivering the same service to the consumers, or people that are demanding those services or products. They will be more innovative. They'll try to find better ways to produce the product or deliver the service. And more service will be obviously provided to the consumers. More business may be established, which help to increase the total output of the economy. The more innovative ways of doing things becomes available, more suppliers will want to enter the market. And the reason they would like to enter the market is because they believe they will be able to make money by entering the well-established market where there are a lot of competitors in. So to summarize, 2.1.2, the competition stimulate aggregate supply through improved production efficiency, through innovation, as well as there will be more business entering the market and then more output will be produced. And then we're looking at the data response. So the data response is when obviously you are provided a scenario that you need to read and understand. And once you understand the scenario, you are then able to respond to the question. So what I'm going to do now, because this is a data response, you are not able to understand the solution without looking at what you would have in the data. So I'm going to take you through the data. We'll read the data. Once we've read the data, we'll then come back and respond to the questions. As I've stated, that 2.2 is a data response. We're going to read what we have here in the data, and then we'll go back and continue with our solution. 2.2 says, study the extract below and answer the question that follows. Public sector failure. In South Africa, many public entities suffer from management failure. Organizations are inefficient in delivering services because they lack a skilled workforce to complete tasks successfully. This results in the services being of poor quality, such as hospitals running out of medicines. There are cases where funds are left unspent even when there is a desperate need from communities. This means that money is returned to the national treasury at the end of fiscal year. So this takes us to the end of the data. Now we're going to go back and continue with our responses. 2.2.1, identify one reason for public sector failure from the above extract. So the extract that we just read, it is management failure and lack of skills. 2.2.2, name the level of government that is responsible for providing services such as refuse removal. You would have noticed from home that your dustbin, if you are staying in an urban area, it normally collected by the municipality of the area. It could be local municipality, it could be local government, or just municipality. If you're staying in Durban, you'll have a Tigwini municipality collecting the dustbins, which is obviously the refuse. And if you're staying in Kels River, which is obviously part of Cape Town, you'll see City of Cape Town collecting the refuse. 2.2.3, briefly describe the term accountability. What does it mean for you when someone says you need to be accountable for your action? Accountability means the duty of an individual organization to explain their decision, actions, expenditure, and accept responsibility for their behavior. So what does it mean when you are asked that you need to describe accountability? It simply means that you are sitting down and then saying, I have done this, I have done it wrong. I'm taking the actions to correct what I have done wrong. So I am responsible for what I have done wrong, and I am here to account for it and do it right. Either do it right now or correct it, or in future, I'm not going to do the same things. I am accountable for my action. 2.2.4, explain the effects of public sector failure on the allocation of resources. Resources will not be optimally allocated, which will lead to some of valuable resources being wasted. Allocation of funds to failed projects An inefficient government department results in wasteful use of taxpayers' money. So, what is public sector failure when it comes to allocation of resources? It means, for example, the supplier is appointed to deliver the service, but they can't, or they deliver it, but at a very substandard. And by doing that, it means that the subsequent supplier or new supplier will have to come and correct the wrongdoing of the other supplier. In that way, the resources are not allocated correctly, and the result to public sector failure. 2.2.5, it's the last part of the data that we read about the government failure. Now let us look at why is it necessary for government to impose taxes on demerits goods. You first need to understand what are demerits goods. Your demerits goods are goods that are not encouraged to be consumed. For example, we're looking at your alcohol and we're looking as well as your cigarette. So those are demerits goods. Those goods are not encouraged to be consumed. However, they are consumed on a day-to-day basis and they are consumed in a very high numbers. So government imposes taxes to make demerits goods more expensive in order to discourage consumers from buying them. So what is government trying to do? Government is saying, I don't want people to be consuming more alcohol because if they consume more alcohol, they'll be going to drive on the roads. And when they do drive on the road, they will cause accident. And those accidents cost in terms of people going to the hospital and using hospital limited resources. So that will make the taxes a little bit higher for demerits goods so that people will be discouraged to buy them. To recover the external costs that are caused by demerits goods to human being and the environment. So what does that mean? So you need to understand if you have your neighbor that is smoking, it indirectly affects your lungs. And in the long run, you might need to go to the hospital and attend that issue of your lungs that is caused indirectly by the smoker that continuously smoke next to you. So now government is saying they want to recover the cost that might come as a result of you needing the public services to deal with the indirect effect of smoke from cigarette. To raise revenue that can be used to finance the provision of the public sector goods. Again, it's almost similar to what I've just explained. On the road, if people decide to drink and drive, they will cause accident. And when they cause those accident, people need to go to hospital. When they go to the hospital, they need to use limited public sector resources in the hospital. So now government is saying, let me raise enough revenue so that I have more doctors, I have more nurses, I have more public facilities in case now the people that are using demerits good, they cause issues that lead to public services being needed. And then 2.3, again, it is a data response. If a question is a data response, what I'm going to do, I will go to the data, we'll thoroughly look at the data, and then once we are happy with what we see in the data, then we'll then come back and look at what we have in the solution. In 2.3, when we're looking at the data that we have, we are being provided with the graph. And this graph is a multiplier effect in a two-sector economy. And what is a two-sector economy? A two-sector economy is a sector that has the consumers, which is me and you, who goes and buy in the shops, as well as the business. The business office is where we buy from. Or you can call them firm, whatever that you like. So if you see here, on your y-axis, you are provided expenditure in billion rands. And if you're looking in your x-axis, we are provided the income. And in the graph, we have two lines. We have the first E, which whereby we see, or first expenditure, whereby we see E is equal to 20 plus 0.5 times Y. And then there's a shift upward. And then we see that E1 is equal to 30 plus 0.5 times Y. right? So we know it's an expenditure and we know why it's an income. Now, what do we see here? When there's a shift of the line, Y move to Y1. And we see the first equilibrium moves to the second equilibrium. And then we're saying in this line, E is equal to Y. So what do we mean? Expenditure is equal to income. So when you're looking at this line, right? Now we've looked at this, I want you to keep this in mind because I'm not going to come back to this, but we are going back to answer the solution. We are going to look at the response that we have. Then 2.3.1, identify the value of marginal propensity to consume from the graph above. You remember from the graph, we provided two lines which you move from down to up. And then in those two lines, what you've seen when they're saying E or expenditure is equal to 20 plus 0.5 times Y. And then the second one, when it moved upward, it was saying E is equal to 30 times 0.5 plus 0.5 times Y. So now that 0.5, it is your marginal propensity to consume, or MPC, from the graph. Just by bringing what you see in the graph, you would have gotten 0.5. Name any two participants in the two-sector economy. I've already explained to you, it is the household and business. So in the two-sector economy, we need to have the household who are buying as well as providing labor, and the business who are producing and providing the services or the products. 2.3.3, briefly describe the term autonomous consumption. So you need to understand what is autonomous consumption. Basically, autonomous consumption are the consumption that everyone needs regardless of what or how much they're earning. So it's a level of consumer spending that is independent of the level of income. I'll make an example. It will be things like your shelter, your food, your electricity, your water. So those are autonomous products. So autonomous consumption, it basically talks about the level of consumption or spending that is independent of the level of income that any household has, but still need those products or still need to make consumption of those particular services. 2.3.4, explain the relationship between marginal propensity to save and the value of the multiplier, which is K. So we're looking at MPS as well as K. So I want you to understand that there is an inverse relationship between the two. And that is the main thing that you need to state in the exam. You need to state or show that you understand there is an inverse relationship between the marginal propensity to save and the value of the multiplier. There is an inverse or negative relationship between marginal propensity to save and the multiplier. The bigger the MPC, the smaller the value of the multiplier. The smaller the MPC, the bigger the value of the multiplier. That shows that there is indeed an inverse relationship between the two. And then the second part was saying use information in the bar graph to calculate the change in the national income. Show the calculation. So I would always say I recommend method 2. How and why? Method 2 is the easiest one. It will save you time in the exam. And here we're only going to be looking at method 2. How do you go about method 2? In the method 2, you're looking at your Y1. Y1, you're going to say 30 divided by 0.3, which is MPC, minus 20 divided by MPC, which is 0.5, and then you have 60 minus 40, which you get 20. Just by doing that, all this information will be coming straight from the graph. And by doing that, you'll get your 4 marks, 1 mark here, just by using the details in the graph. And then by calculating, you're going to get another 1 mark, 1 mark, and then the final answer will award you 1 mark. So a total of 4 marks just by doing a very easy calculation. And then 2.4, discuss exogenous monetarist explanation of business cycle. How does monetarist explain the business cycle? Monetarists believe that markets are inherently stable. Any fluctuation in economic activities are caused by the external factors. The growth part of the economy is determined by the supply of factors of production. The market forces of demand and supply will always bring the market back to equilibrium when imbalances develop. Monetarists suggest that the government should not intervene in the market operation because intervention led to deviation from the potential market growth. So, what are they saying? They're saying the government should not reduce taxes, provide subsidy, or do any form of intervention because of that, or by doing that, they may hinder the potential growth path of the economy. Structural changes that affect production, employment, investment, government expenditure, taxes, import and export may lead to the expansion of the business cycle. So we all know that the business cycle is heavily controlled by the production, the employment, the investment, import and export. So any changes that happen in these parameters, it will obviously result to the expansion in the business cycle. And that is the belief of the monetarist when they explain the business cycle. And then random socio-economic shocks, such as sudden increase in the fuel prices, may affect business confidence and consumers' confidence. Natural disasters such as drought and floods may negatively affect agricultural, forestry, and tourism, reducing the level of economic activities. Now we are at the end of 2.4. We're going to be looking at the last question, which is 2.5. 2.5 says, how can the macroeconomic objective of price stability positively influence the South African economy? Price stability ensures that prices remain relatively stable, which encourage consumer spending and stimulate economic growth. So what does that mean? If the price remain the same, consumers have no rush in buying more or buying less because they know that the price will remain at the level that they're expecting. So when they're going to buy, they will buy what they need and then they go and buy again. So there is a stability, and the consumers, they can predict what they are going to find when they go into the shops. Stable price promote job creation, reduce unemployment rate in the economy through more foreign direct investment. So what happens if the investors know that if they come to South Africa to buy pens, they will need 100 rand. Every time they come to South Africa, they will need 100 rand. So they are able to understand what they need to add and the cost price of pen to make the desired profit. And at any point, they know that when they come to South Africa to buy those pen, they are going to be selling at the price that would attract certain level of profit. So therefore, that will attract the foreign investment. However, it is very important for you to understand if they come and find out the pens are 120 when they come back to buy them, they are not going to be buying those pens, and that will chase away the foreigners. Saving may be encouraged, which ensures availability of loanable funds for private investment. Interest rates may remain stable and encourage spending on durable goods such as making mortgage bonds for purchase houses. Price stability maintain the purchasing power of money since the real income of households are better preserved. Stable price help to maintain demand on South African export on global market, thereby ensuring exchange rate stability. Extreme fluctuation in the business cycles may be avoided, which promote more sustainable economic growth. Price stability helps to keep inflation expectation low, which reduce wage demand by workers and maintain industrial peace. Price stability helps consumers and business to maintain or to plan and make informed decisions concerning savings, spending, and investment. The credit rating of South Africa may improve, which could lead to increased investment in the country. As I've already stated, the investors will be willing to come to South Africa if the prices are stable. Also, again, if the price are stable, you know you'll be able to determine how much you can save, how much you need to spend, and how much you need to invest. So in that way, it also promote the consumers in terms of making informed decision, which are very helpful for them in the long run. So you can see that the price stability is very positive for the country. It resulted to greater and beautiful things. That takes us to the end of question number 3. Please follow me for more videos of the similar nature and please suggest what you'd like to see me providing here. Thank you. Bye.